on the business. Just two or three names I want to highlight before we bring in our next management, which is ready with us. Look at Balaji Amines and Relaxo, two huge underperformers. Both are coming up a little bit, and they've had one-way slides. But Balaji Amines is picking up about 2-3%, and the other one is Relaxo, which is up about 2 or 3% or so. Delivery is going the other way. Delivery is, it saw an attempt at a recovery yesterday by 4-5%, but that is selling off. And RBL Bank is down a full 3% now. We highlighted that this morning. And that is the one which is taking a bit of a knock. The market is doing pretty well overall. I mean, we're up about, 70 points. 18,190 is what we have at this point in time. So, looking pretty good from the time that we actually started the day. By the way, at these levels, we get into reckoning with the first resistance level, which we've been highlighting. Right now we've taken out the 18,184 level, which was the high which we made on 18th of January. So we are above it, and we're also now testing the 38% retracement to the full fall from the all-time high of 18,887 to the absolute low which we made on the 12th of January this year. So the 38% retracement is 18,191, and we're exactly there at this point in time. So interesting levels. Let's see if these can be taken out. Tata Communications posted a mixed set of third quarter earnings. Revenues have seen a rise of 8%, with the data business clocking in double-digit growth for the second consecutive quarter. Margins, though, contracted a bit to 24% from 26% last year. We have Mr. Lakshminarayanan, Managing Director and CEO at the company, joining in to take some questions. Mr. Lakshminarayanan, thank you very much for your time. Good to have you with us here. Let's just start with that margin point. Could you tell us what went into that margin mix this time around? It's a little lower than what you had guided and what you've done the previous quarter as well. Do you still maintain the margin guidance, which is a little higher from what you've done? Go on, sir.
Good morning, Prashant. Good to be with you. Going back 3 years ago when we talked about our strategy, we talked about financial fitness, our investments in products to make it more holistic and deliver a platform solution, and also investments in our customer to go deeper into the customer segments. I'm happy to say that we are delivering now on all of our strategic goals. With the financial fitness, our balance sheet is quite strong. The investments that we have made and continue to make in our products, investments that we have made over the course of the last year in enhancing our sales and marketing footprint in various geographies are paying the dividends now, and that is the result that we are seeing in terms of the revenue growth. These are investments that we are making in terms of the people, talent, training, and we've always maintained that these costs will come back, and especially as COVID effects go away, some of these costs are going to come back. So these are as expected, I would say.
But we are Mr. Lakshminarayanan, so if you're suggesting that investments will continue, costs may come back, is there a threat to your margin guidance of 23 to 25%?
Our goal is to stay within 23 to 25%. That is what our goal is. But we are going to be focused on growth, and we also focused on delivering the right ROCE. We are making investments as required, so we had given a higher guidance in terms of our capex expenditures. We are investing where it is required, but we will ensure that we deliver the ROCEs that we have guided. Our ambition is to stay within the 23 to 25% margin range, but we are focusing on growth, and that's clearly what we said we would do, and that is what we are doing.
Okay, so since the focus is on growth, the last time we spoke with you, you said that the first milestone is to achieve double-digit data revenue growth. Now, I think it's been 2 quarters in a row that you've achieved that. Will this data revenue growth rate sustain at 10% plus? And what do you see as, what's the prognosis over the next, say, 4 to 5 quarters?
No, it's we are very bullish. The reason we are saying that is we are deepening our engagement with our customers. Our entire portfolio, which we call as the digital fabric, resonates with our customers who are really operating in this hyper connected ecosystem that they operate in. The digital fabric resonates with them. Our digital fabric starts all the way from a connected car, a connected worker who is outside the campus, all the way through what we can deliver with them through private networks in the campus, and the network and through internet that we take them to cloud, and the entire range of digital fabric that we offer, and including the customer experience with our DIGO platforms and others. It resonates with our customers, and we're able to have much deeper engaging conversations with them. That's one thing that gives confidence. And the second thing is, of course, the investments that we said we would make to enhance our reach in terms of sales and marketing efforts, and especially the international geographies. Those investments are beginning to pay results.
Okay, all right. Sir, could you put a number to it?
In a sense, yes. We are on course for double digits.
Earlier you were talking about double digits. You have managed that for 2 quarters, but do you want to put a next goal, a next target out there for our viewers?
So we have a very ambitious plan. And I said, 3 years ago when we talked about the financial fitness, we delivered ahead of time. There was a bit of pressure on us to say when the growth would come. I always said that, to turn around and to get growth, it requires a lot of investment, not just in products and platforms, in people, talent, culture. All of that, I said that would take time, and we are seeing the green shoots of those results coming through.
All right.
The upsides are quite there because, especially in the international markets, our market share is still low, and there is a much more upsides to be had.
Okay, all right. Let's focus on a couple of other aspects then. Data margins, where do they settle? They're at around 26.5%. We have it for the overall company, 23 to 25%. But for bulk of your business, which is data, where do you see this margins settle? That's point number one. If you could give us a number or a range. And the second part is the debt number. It's at around 6,300 crores. What's the outlook from there, given the kind of investments you want to make, or is there further reduction that you're targeting?
So on the first question, on the margin itself, data margins. See, we have in our digital platforms and the incubation portfolio put together, we have a mixed set of offerings, starting from the next generation connectivity, the collaboration, the connected solutions, the cloud and security. We are investing in edge. So our media solutions are making use of edge to deliver great sporting events and great experiences to our customers. So these are the portfolios that we have. And each of these portfolios have a different margin profile today, a different investment profile, and a state of growth. So that is the reason why we don't want to disaggregate this and say what each one of them do. Broadly speaking, our effort would be to maintain at that 23 to 25%, but prioritizing on investing for growth. That's what we would say.
So there are some growth challenges. Sorry, yes, please go ahead.
Yeah, sorry, there was a second question on the debt. I think we are very pleased to see that the cash generation efficiency has significantly improved in the company. We have been able to fund the acquisition that we just announced and still reduce debt. So we are in a very comfortable position. And we have, our balance sheet strength today offers multiple optionalities. Besides our own cash generation, we have other assets that we can monetize in terms of properties and so on. So for that gives us the option and the strength to be able to focus on growth.
Okay. Since you've talked about growth a lot, I wanted to ask you, is there any hindrance to your growth targets because of the execution delays by clients? I mean, this was something we were discussing a while back as well, as to how the clients that you cater to are seeing supply side challenges in terms of chip shortages. There's employee attrition in overseas markets. There's also, delays in deal closures, decision making that you yourself have spoken about. Will that be a deterrent to growth? And how is the situation on the ground at the moment?
I don't think the situation has improved quite significantly. I think some of the supply chain challenges remain. In the last quarter, I called out that it is not greatly hindering, nor is it assisting us, is what I mentioned. With respect to the decision-making timelines, we had called out almost 6 quarters ago, it's taking longer. What we have done is, if that is the client situation, let's focus on what we can control. So we said if something takes longer in the pipeline, we are wanting to push more through the pipeline so that some things will start coming out. And that is why we started investing in our sales. And we have enough in our pipeline. Today, our funnel is quite strong. Our win rates are inching up gradually. And all of these are resulting in deal closures, which are much above what we have been used to. And that's is what is resulting in the growth. Now, I think we will stay focused. Our customer conversations show that our customers are resonating with what we are saying. We are able to address some of their cost side of the troubles that they have because our platforms deliver productivity improvements. We are able to consolidate globally and deliver them the efficiencies, as well as we are able to address on the revenue side of the levers for digital transformation, such as delivering superior experience with our DIGO platform, for example, or with our Move platform that delivers connectivity management, data enablement to bring more intelligence into their product through connected solutions. So I think we are able to now talk to both the cost side and the revenue side of the equation. We feel that our relevance to our customers are increasing. And those are the reasons why, despite the macro conditions that you hear, we feel confident that our engagements are deeper and getting deeper with our customers.
All right. Thanks a lot for joining in. Have a great 2023. Thanks for being with us on CNBC TV 18. Let's slip into a quick break. On the other side, you want to watch this one. This is our much-awaited list of top 20 stocks compiled by the CNBC TV 18 team. Stay tuned for the big reveal.